All right. So this series that I'm thinking of making, it's going to be basically some of the rules that I like to teach beginners. It's concepts, okay? They're important for consistency. In the beginning, all these rules are going to be broken. I guarantee you. When you start trading, you have no sense of timing, you have no experience whatsoever, and a lot of these things will mean absolutely nothing to you. But as time goes on, you will have what I call aha moments. Aha, that's what the fuck he was talking about when he told me this back then. Okay? The important part is to listen and write it down. Right? There's a reason why I'm not going to. There's not a lot of screen time here. I just want you to listen to me. Write it down. Think about it. Maybe have it in your journal. So when you're trading in the future, you can repeat these things to yourselves. There's going to be at least 10 key points to this. I'm just going to talk and you're going to listen. It's going to be in podcast format, I guess. I don't know if I'm going to give it some visuals. Probably not, because I really want this to be just a conversation. Okay? The first thing you need to understand about trading is that the market pays you to be patient and to be disciplined. When we come into trading, a lot of people, their closest idea to this is more like gambling, right? It's an aggressive nature, right? I gotta invest money to make money, right? You gotta pay to play. Like, this is the mentality where most of us are coming from. And the sad part is that most people don't want to hear this, right? They don't want to hear that the calm ones, the mentally controlled ones, the emotionally controlled ones, those are the ones who have the possibility of doing well. The ones who are aggressive, right? The ones who are not in control of themselves, the ones who are money hungry, they don't do well here. The reason is pretty simple. The market is made in a way where it slaughters human emotion, right? Lack of patience. In trading, there's a very simple concept. You don't chase price. You let price come to you. Meaning, when you want the market to go to a specific price, let's say price 1,000, that is your price. It's like investing in a house. If you're going to buy a house at $130,000, but at this time it's $140,000, but you know it's really only worth $130, and the owner is just adamant about 140, 140, 140, but you know it's worth $130, you're not going to pay him $140. You're going to wait for him to come back down to earth, find out he can't sell it for $140, and give you your price of $130. Or if he doesn't want to, then the house is not for you and you'll look for a better investment. Okay? Trading is very simple. But a lot of people don't understand that. They don't understand the concept of discipline with this. As a beginner trader, start to really worry about doing the little things that are being said here. They're not woo-ha, woo-woo, bullshit, hippie shit. It's real shit. Like, writing things down is important so that you can remember from a place of fact and not a place of emotion. If you try to remember from memory, you only remember things. The positive, you remember it really positively, and the negative, you remember it really negatively. And somewhere in the middle is the truth of what really happened there. Writing things down is extremely important. Next, trading every day. Okay? You don't need to enter the market every day. What you need to do is be consistent in your technical analysis and your approach, and being in tune with what's going on the charts. You need to maybe read, maybe listen to podcasts, maybe watch these videos, maybe mark up charts, maybe journal. Investing money in the market is not necessary every day. It's not. But in the beginning of your career, chart time does matter. You need internal timing. You need to understand things from the deepest part of your brain. I like to compare it to crossing the street. If you're from New York or New Jersey, if you've ever seen somebody that's not from here, from New York, right? Crossing the street in the city is a skill. It's a timing. Like, we know how fast a car is going to barrel down and whether or not you're going to get hit. And there's taxis and bikes and there's pandemonium, right? For people who are not from here, like let's say my family from Colombia, they came down to this country. They're shocked at how much is going on over here in Times Square, let's just say. But you're crossing the street, the light's still green, while somebody else is scared shitless on the corner, right? Why is that? Experience, right? Timing. You just know the different variables and aspects that exist here. It's all normal to you. In trading, it's very similar that for a beginner, everything's so fast. There's so much going on. You're nervous. There's so many things running through your head. It's going to take time. And the only way to really get there, to really be able to maneuver the streets of the trades, right? To maneuver the market is to be with these charts for a certain amount of time. That's why I don't want to hear when someone's like, "Oh, I just started trading 2 months ago and I'm already making $100,000 a month, or I'm already making $10,000 a month." Bullshit. No, you're not. You may have gotten lucky and made some money, but let's see where we're at a year from now. Because getting lucky in the market means nothing. This whole thing, this whole trading thing, investing in general is about consistency. Who the hell cares about the one time that you made 30 grand? I don't care, right? 30 grand is nothing. You could spend that in a year, like you could spend that in a week, right? I mean, I just bought something recently where 30 grand is, I wish it was going to cost me 30 grand to finalize that investment. It's not. It's going to cost me way more. 30 grand is nothing. That's bullshit money, right? But I see these different posts of people making all this money. That's why when I make a testimonial, I tell the truth about it. This person has been doing this and they made this much money. I like to follow up with my testimonials. You'll see the same faces pop up to show you that it's not a one-time thing. All right, it wasn't a lucky time that person sat down and threw some money in the market and then boom, profits. That's not what we do here, right? So do yourself a favor of being in tune with the charts day in and day out, even if you're not going to trade. I've been doing this for a long time. In my group, one thing I'm known for is my consistency. As a coach, as a trader, I'm a student of the game forever, no matter what it is I'm doing. And one of my tricks, one of the things that helps me the most is the fact that I am here every day. I like to remind people, I mean, look, I've been coaching people for a long time. But this group that I created it recently, about 3 years ago. And during these last 3 years, sadly, my grandmother passed away. And people expected me not to show up. Still showed up. I still made my updates for the day. I still traded. I actually caught a pretty good trade on that day. On my birthday, I show up. Why? You may ask why. Why? I was grieving. Why did I show up? Because I know that if I separate myself from the charts for too many days, I feel like I'm playing catch up. And I don't like that. I don't like that feeling like I'm chasing price down. I like to know that I know exactly what's going on my charts. And no matter what, if I look at it Monday, Tuesday, Wednesday, I've been here. So all I'm doing is reading the next page of the story. I'm not trying to catch up on this whole chapter, right? And it doesn't take a lot of time. If you don't know what you're doing, then yes, to you, you're like, damn, I don't have 5-6 hours a day to do this. What if I told you it only takes you about an hour a day of mixed up time, right? Maybe 20 minutes in the morning, 20 minutes in the middle of the day, and the rest of it at the end of the day. What if I told you the longer you do this, the less time it takes on your day-to-day schedule? That's the truth. Ask any one of my students. One of the things that I fix for them is their time. You cannot expect to do this and also live a normal life if you're an adult and have a job and have a wife or a husband or a boyfriend or a girlfriend, or for you people in that are what's that called, polygamy, you know, you have two significant others. How the hell are you going to balance all that and also trading? You can't. Trading is about being there when it matters, and your daily due diligence is extremely important. So make sure that that's something that you're doing. All right, make sure that you are purposely with intent sitting at that computer or at that laptop or on that iPad or on that phone and really coming up with a solid plan for your trades. And if not a plan, then seeing your day-to-day activity and how your markups are working and what you wrote in your journal, whether or not that worked out, and how you're progressing. You don't necessarily have to put money in the market. Okay? So that's that. The next one of the biggest sins in trading, turning a winner into a loser, aka not paying yourself. People who don't pay themselves really don't understand what's going on here. Let's say, for example, you put in $1,000 into a broker account. You're trading. Your trade's up $500. You over leveraged or whatever. Your trade's carrying, it's up $500, and you're like, you have a number in your head, $1,000, right? It has to go to 1,000 for me to take it out. That's not how you want to think here, okay? First of all, when you win in the market, use a very simple concept. If you risk 30 pips, 40 pips, 50 pips, let's put it in dollars. If you risked $100 and you're up $100, it's time to pay yourself, okay? If you risk 30 pips and you're up 30 pips, it's time to pay yourself. Let's say you don't, all right? Let's say you don't. Let's say you have this understanding of like, it has to make me a certain amount of money and your risk to reward is all off, and you got a $1,000 account and you're up, let's say $500, but it's hit a certain point in the structure or in your plan where it's time to cut. Structurally speaking, trader-wise, right? What's in front of you on those candles, it's time to cut or take profit or drag stop loss or do something, and you decide that no, it has to be a certain dollar amount that you have to make, which is a mistake. You have to do everything risk to reward. Pip counts, right? By the pip. If I risk 30 pips and I'm up 30 pips, I got to start thinking of doing something here. But let's say you're up in a trade and you're winning. And you're winning and all of a sudden it starts coming back. It starts coming back. It starts coming back. And now you were up, let's say $500 in profit. Now you're only up $250. And now you're only up $200. And you're watching it and watching it. And it's coming back. And it's coming back. And it's coming back. If you end up in the negatives after being in a certain amount of profit where you're 1-to-1 risk to reward, 2-to-1 risk to reward, 3-to-1 risk to reward, you risked $200 on this trade and you were up $400, but now you're about to be break even on this trade, and that trade turns into a full-blown loss, you just broke one of the biggest sins of trading. You never turn a winning scenario into a losing scenario. You never do that. It's hard enough to become consistent in this game. You can't work against yourself. In my private group and my private one-on-one students, I teach them to pay themselves. Think long game, right? You notice that every point so far has been the long game. I don't worry about hitting a home run each and every single trade. I worry about simply incrementing my account percentage gains. Think that way, right? A little bit every single day. Remember, you're supposed to be doing this for the next God knows how many years. This is a hobby that can become a career, right? How do you think these students become what they are? It wasn't overnight, right? Their accounts are growing and growing and growing. And then while their accounts are growing incrementally, right, slowly but surely, guess what else is growing? Their confidence. And once you have that, once you have confidence and understanding, those numbers that you have in your head where you're trying to hit these home runs with, it'll be achievable, okay? Easily achievable. If you have what matters, which is experience and the skill set. You're not going to get that by turning your winners into losers. You know what you're going to get? You're going to get a whole lot of questioning of self and a whole lot of issues with being able to progress. Do yourself a favor and don't turn your winners into losers. And we'll take it one step further. When you are in the market, you don't add to a losing scenario. You stop the bleeding, okay? When you are in the market, you don't make it worse, okay? I'll give you a real life example, right? I remember when I was in high school, there was a fight, okay? These kids were fighting or whatever, and the kid was kicking the shit out of the other kid, and the kid on the floor is bloody nose, messed up, but he doesn't want to look stupid, right? He's still trying to keep his pride, right? It's a key word there, pride. And he's on the floor all messed up, and he goes to the kid and he's like, "You hit like a bitch." And the kid turns around and kicks him square in the face. And that guy was out like a light. The fight, he was going to lose it no matter what. It was over. It was done. He was bloody on the floor. But he had to save his pride. He had to say something. And that got his jaw totally messed up. You know, he probably has CTE till this day because that was definitely a concussion for nothing, right? And with the trade, it's the same thing. The trade is now in the negatives. Let's say you take a trade and you just never got into profit. It happens. You took a bad trade. It happens. What you don't want to do is be like, you know what, I'm just going to add risk, and then when the other one breaks even, I'll cut that one and keep my better entry. Or you know what, this is an opportunity for me to add more risk, and you're adding more and more, and it's going more and more negative, and you're just doubling and tripling up your loss now, and you're not cutting. That's the easiest way to blow an account. You lose sight of what you started with, right, as far as your plan. Never do that. Don't be the kid on the floor where the market is going to turn around and kick you square in the face. Just stop. Take your ass kicking and lose gracefully, as I like to call it. End the bleeding. Let it hit your stop loss or cut it early, whatever your plan was, and just stop. Stop everything. You can come back later and reload and reassess and replan and come back, right? Banks, myself, anybody who's consistent out there loses. I'm not going to allow one bad moment to destroy my account. That's dumb. Here's the other thing. I don't want to allow this more. I don't want to have to turn this into such a bad situation where I'm just reloading the account and redepositing. Because if you think about it, for most of these scenarios that I've encountered with these one-on-one students, when I look at their trades and I look at their history and I really assess the way their career has went, that's a critical part in teaching people. Most of these people, when they redeposit, they had way more money in their account if they would have just lost and ended it than what they're redepositing, right? So what I mean by that is this. They had a $1,000 account. They take a trade. They had maybe negative 300. They have $700 floating. They could just cut it and keep their $700 and they only lose 300. But no, I got to add another entry and add another entry and add another entry. By the time it's all said and done and they blow their account and it's time to redeposit, all they're redepositing is $250. You might have kept the freaking the $700, right? If you just would have cut the trade, you would have had $700. But now, because you're prideful, because you're filled with ego, because you don't understand what it is to be a trader and a savvy investor in the market, you are starting basically from scratch when you would have been ahead of the game at the $700. You see the logic there? Most people don't have that type of logic. So start now. Start thinking like that. Think smart. Think long game. These points in this particular segment of this video have been about thinking long term. Consistency, long term, right? A little bit every single day, long term. Discipline, long term. These are all extremely important things. All right, final point for this video, because there will be more, but I wanted to make this quick one. Well, it's going to be like 20 minutes, so fairly quick. Long game, all right? What do you do when you're losing? Do you come back? Let's say you got a $1,000 account and you popped in $5 a pip and you just got smacked in the face and you lost $150. Do you go, fuck, no, I want my money back? A standard $10 a pip. And as soon as I get 30 pips, I'm going to cut everything, make my money back, and make my profit. No. When you lose, there is something that did not make sense to you in that chart. You are not in a place, a mental space, or an experienced place to do that, ever, right? You didn't understand what was in front of you. You just lost. The answer is to take a step back. The answer is to lower your risk. Don't be the bozo who is out there. Again, I'm going to relate it to fighting. With me, when you get coached by me, everybody knows I relate things to combat sports for the most part, because that's something I understand very well. So if I'm in a fight, I just lost round 1. Round 2, I'm not coming out trying to murder this person with haymakers and just blind power. I need to assess how round 1 went and come up with a better game plan, right? I need to use technique, experience, understanding. I need to be who I am when I'm training, right? I need to be of clear mind. I need to pick this person apart, because obviously what I was doing before in round 1 did not work. So with the market, it's the same thing. You need a moment. Let yourself lose. I would recommend in the following trade, lowering your risk. Bring yourself back. The goal isn't to make the money back there. The goal is to bring back your experience points that you just lost. In the beginning of your career, every time you lose, you're losing a little bit of confidence, right? Because you're new. Every time you win, you're like, yeah, I missed a big pip. I made it. I did this. I made all this money. I'm going to get this Lambo. I'm going to get this Ferrari. It is what it is, motherfuckers. And then when you lose, fuck, I suck. I need training. Let me go find these indicators. Oh my God, let me go use this. Let me go get this. I'm going to start Googling. Fuck, this doesn't work. Emotional imbalance ensues. You're all over the place. Okay? That is not what you want to be as a trader. What you want to be as a trader is always emotionless, calm. So you want as little bit of emotion as possible. So what you can do after you lose is, one, take a break or take a step back, trade a different chart, and or lower your risk and reassess and come back later. What you don't want to do is raise the risk. What have you noticed with the last couple of points here? You never want to have not even the slightest chance of making a bad situation worse. All right? When you're in the negatives, let it hit your SL or cut the trade, walk the hell away. When your trade was profitable, you never want to take that positive situation, make it worse, right? Make it into a negative one. You never want to come back with that revenge mindset where you just lost round one and you're about to slug it out round two. You're going to get murked. You also don't want to be on the floor bleeding, right? You don't want your trade bleeding. Your account is bleeding out over here. The stop loss is about to be hit and you're adding entries and adding entries because your ego won't let you lose. Come back later. Go train some more. Go assess some more. Come back with a better plan. Back in high school, that kid, what he should have done is should have taken his ass kicking and on the next day blindsided the crap out of that guy. That's what he should have done, right? Because he wasn't going to beat him in a fair fight, and if his ego really was that hurt, then come back later and blindside him. That's a better plan. So the plan isn't to just be stupid and be blind and be aggressive, testosterone-filled, no thinking, no chess, just checker mindset, right? The idea is to think. This is a thinking man's game. Trading is for people who can assess details. You got to have thought process here. You got to be of clear mind all the time. That is extremely important with all investing. What investing do you know works well long term? That's very key. Long term, where you're not thinking, where you're not doing your due diligence, right? Who do you know is out there in the business world that is just flying, just doing shit however they feel, right? No, just emotional. Like they wake up in the morning, they're like, money here, money there. It doesn't work that way. It's a thinking man's game, right? Anyone can do this. That is my opinion. It's whether or not that person's going to give in to the things that are non-negotiable in this game. You have to let experience do its job. You have to let the little things that we do in here do its job. Journaling increases experience. Losing gracefully allows you to stay in the game, increases experience. Or staying disciplined with your day in, day out activity increases experience. Carving out an hour a day, whether it's 1 hour total or 1 hour mixed and matched, or if you got 2 hours, even better, for you to be able to write some stuff down, analyze some stuff, maybe read a book, maybe go, if you're in my group, go through some content, right? These things are not necessarily about putting money in the market, right? The sexy part of it. It's the real part of it. Doing your due diligence is extremely important. Being consistent in it and thinking in every single moment of your trades is extremely important. We will continue this series maybe next week. I just wanted to throw this at you because honestly, this is how I'm going to answer all your frequently asked questions through this type of format. Happy trading.